In this video, I'm going to explain a little bit more about the cash flow statement. The cash flow statement is a statement that reports the cash flows, the cash inflows, and the cash outflows. The inflows is when you receive money. So we're only focusing on cash in this financial statement. So when you receive money, it's called an inflow. When you spend money, when you use your cash, then it's called an outflow of cash. So whenever cash is involved, then the transaction will be reported, will appear in the cash flow statement. So every time the company uses money, every time the company receives money, this will be recorded in the cash flow statement. The cash flow statement is organized in three sections. You have, first of all, here the operating activities section. You have the investing activities section, and you have the financing activities section. So, and these three sections constitute the statement of cash flow. So whenever the company uses money or receives money, and this amount of money, the cash flows, are related to its operating activities, these flows will appear in the first section, the operating activities section. I call it the O section. Whenever the company, receives or spends money related to its long-term assets, which are called the investing activities, then these cash flows will appear in the second section of the cash flow statement, and the financing activities section is the third section in the cash flow statement, where you're going to put all the transactions related to the financing of the company. Here you have another picture, and I'm going to explain a little bit more about these three sections. Operating activity, O. Investing activities, I. Financing activities, F. So when do you have to include the cash flows in O? The operating activity will then include all the transactions related to the operations, what you do for a living, the operations of the business. So if I am a baker, every time I do my job, everything that is related to my main job, which is to prepare pastries, to bake bread, to deliver my bread to the supermarket, to fill in the gas in my delivery van. So everything that is related around my main activity, my main focus, which is to produce bread, is called the operating activities. In the second section of the cash flow statement, the investing activities, you will find all the cash flows, money coming in and money going out of the company related to the long-term assets. This is what you need to remember. Long-term assets, that's what you need to remember for I, for the investing activities section. What about F? For F, you have all the long-term liabilities plus everything that is related to the equity, to the shares, to the equities, to the shares, to the investment that are made by shareholders in the company. So this is a trick that I would like you to remember forever. Everything that is related to O is the short-term assets or the current assets, and the current liabilities, the short-term debts. So current assets, current liabilities, they belong to O, to the first section of my cash flow statement. Long-term assets here, they belong to the investing activities section, the second section in my cash flow statement. And all the transactions related to long-term debt, which is to take a long-term loan from the bank, means I receive more money from the bank, or whenever I reimburse, if I'm in the shoes of the debtor, to the bank, the loan that I've taken for a longer period than 1 year. So this reimbursement leads to an outflow of cash. So this outflow will be recorded in the financing activities section of the cash flow statement. Whenever I receive money from an equity, because you have new shareholders who have invested in the company, so this money that I have received as a company will be recorded in the financing activities section of the cash flow statement. So this is what you need to remember, is that the statement of cash flow will record all the inflows and outflows of cash, And it's going to split these inflows and outflows of cash into these three categories, O, I, and F. So if I put together these three categories, here you have the operating activities section, the investing activities section, and the financing activities section. What do we do really in the cash flow statement? You explain how come the cash at the beginning of the year has become the cash at the end of the year. So the cash flow statement only focuses on one account that you find in the balance sheet, cash. Cash is so important that it has its own statement. This statement explains how the beginning balance has become the ending balance at the end of the year. So here, the variation between the beginning and the end is explained in the cash flow statement. Let me show you a little bit more how a cash flow statement looks like. Here you have MaxiDrive Corporation. You recognize the first section, the operating activities section. You recognize the second section, the investing activities section, and the third section comprises in the statement of cash flow, the financing activities section. If I put together these three amounts, 1,069 from O minus 1,625 from I, and plus 400 from the financing activities section, I will get here to minus 156. What does it mean? It means that between the beginning of the year 2018, it is the year 2018, and the end of the year 2018, there has been a variation of minus 156 in my cash account. You see it here at the bottom of the cash flow statement. This is what we call a cash reconciliation. You reconcile two amounts. You explain how come the beginning balance has become the ending balance. How come the beginning balance of 5,051 has become the ending balance at the end of the year of 4,895. So this whole statement explains this minus 156 in the cash flow statement. Here, what the most important number for me is the cash flows from operating activities, this one. It's so important because it is the only place in the long run where the company can make money. That number can be seen as even more important than the net income, because the net income, remember, the revenues do not take into consideration only the cash sales, they as well take into consideration the credit sales. So the cash flows from O is probably a more accurate indicator of the health of the company than the net income. I like it when I is negative. I like it when I see here minus 1,625, because it shows me that the company has invested in machines, in equipment. It shows me that the company believes in its future. It shows me that the company is ready to compete in the future. So I like it when it is here negative. And if I put together these three numbers, as I said, I explain how come the beginning balance of 5,051, which was the amount of cash I had at the beginning of the year in my balance sheet, how come it has become 4,895. On the following slide, you have examples of cash flows that will be recorded in the cash flow statement. For example, for O, operating activities, remember it's everything that is related to the main focus of the business. When I sell merchandise, when I sell bread to my customers, I receive cash. This cash will be recorded in O. The investing activities section, when I purchase a long-lived asset, a long-term asset, when I buy an equipment, when I buy a building, when I buy a van, when I buy a vehicle, a machine, this here I buy. This purchase means if you visualize the transaction, I use money, I pay for my equipment cash. So this cash that goes out of the company will be recorded in the investing activities section of my cash flow statement. For the financing activities is everything related to long-term liabilities and equity. Here, the example is when I borrow money from the bank that I have to reimburse in 2 years, for example, this inflow, because I'm borrowing money, I will receive money. as a company, this inflow of cash will be recorded in the financing activities section. You have here the cash flow statement one more time with the heading, with the 4 elements as usual. The cash flow statement is prepared for a period of time, unlike the balance sheet, which is prepared at one point in time. You have each section which is presented separately from one another in these following slides. You have here the operating activities section, which is presented, remember, the most important part of the cash flow statement, followed by the investing activities section and the financing activities section. And at the bottom, you have what I've called before a cash reconciliation. To reconcile 2 amounts means to explain how the first amount, beginning of year, balance of the cash account, has become the second amount, the end of the year balance in the cash account. Remember that because of the revenue recognition principle, the revenue, the net income, usually is absolutely not the same amount that you find in the cash account. For the operating activities section, for the first section, there are 2 ways to prepare the cash flow statement, the direct method and the indirect method. For the 2 other sections, for I and for F, we're going to always prepare it the same way. The direct method is the method that we're going to use in the first part of our program in BOSC1, and the indirect method is the one that we're going to study in chapter 12 at the end of the program of BOSC1.